Hi, good morning. Welcome to Morning Kappa. Here we come to the week 4 of July with futures. Okay, before we begin, we'd like to highlight a brief disclaimer. Trading futures and options involve a high level of risk due to leverage and may not be suitable for all investors. This presentation is intended for educational and may not and informational purposes only and does not consist of invitation or recommendation to buy or sell any financial instruments. Please consult your licensed broker or financial advisor before making any trading decision. So let's start. The market landscape in week 4 reflect a broad resurgence of risk-on sentiment across both equity and industrial commodities board, as negotiation resumed to establish potential 10-day ceasefire between the US and Iran. The intense supply concerns have come, giving rise to a constructive accumulation. For local products like FKLI maintain consecutive positive profile in week 3 and 4, supported by regional capital inflows. Meanwhile, FCPO continue its sideways consolidation, holding neutral stand across both weeks. And in Asia, we remain positive view on Hang Seng Index this week. The China A50 successfully recovered from a sharp negative shock last week and now is stabilizing into a neutral stand this week, while retaining its long-term positive structural trend. In the US market, the Dow Jones, Nasdaq, S&P 500 remain locked in short-term neutral consolidation phase this week as traders await upcoming corporate earnings and interest rate cues. However, their underlying long-term trend remain firmly positive. And Nikkei 225 staged a notable recovery, rebounding from its negative zone to join the Western indices in a neutral stand. In grain complex, after a strong positive run in week 3, driven by our input costs, corn, soybean, and soybean oil have all eased into a neutral profile this week as a supply forecast normalize. For metal, gold, silver, copper are stabilizing and posting positive stand alongside solid positive long-term overall trend. And crude oil continue to display one of the clearest trend on the board, maintaining back-to-back positive profile in 2 consecutive weeks. Ongoing Middle East shipping tension and tight physical inventory are providing a firm floor under energy prices. Natural gas remain the structural outlier, stuck in neutral profile and overall negative trend due to persistent global oversupply. And gold climbed above 4050 per ounce yesterday, rebounding from recent losses as investor access to the potential resumption of peace negotiation between the US and Iran. Such talk could ease energy-driven inflation risk and reduce concern about interest rate hike. Meanwhile, the US Treasury yield rose sharply this week, with market now pricing in about a 55% chance of a Federal Reserve rate hike in September, up from 51% a day earlier. This development highlights bearish pressure on gold as rising yield and the prospect of higher interest rate increase the opportunity cost of holding non-yielding asset like gold. At present, gold stood steadily above 4020, attempting to break 4120 level after rebounding from 3965 level. The next resistance level to monitor are 4210, 4430, and 4120 remain as the key level to watch. Any failure to breach above 4120 will trigger the market to go back to consolidation. WTI crude oil futures are showing strong bullish momentum, rising from 73.7 per barrel last week to 84.6 per barrel yesterday, an increase of 11.5%. The US conducted the 9th consecutive days of airstrike on Iran on Monday, while Iran retaliated with drone and missile attacks on US bases. This may signal that US military operations could expand in the coming days. The conflict in Middle East is widening, with Iran announcing plan to impose a maritime blockade on Saudi Arabia, posing a potential threat to Saudi crude export through the Red Sea. Global crude supply are tightening due to reduced flow through the Strait of Hormuz. The International Maritime Organization has warned that crossing the strait is dangerous at present, as Iran continues targeting tankers attempting to transit. As a result, prices are now attempting to reach a level of 86.32 level, after rebounding from the support at 70. If this resistance is breached, the next level to monitor is 93.747. Before we look ahead, let's review the outstanding market call over the weeks that we had. We had about 4 calls, where 3 in position, while 1 is pending at entry. We have 1 micro copper call on the 24th of June. It is now in position, state for a positive outlook at reference price of 6.11. Current price now is 6.54. The second outstanding call is micro natural gas. The short-term chart setup is positive with reference price at 3.025. The price now is 2.849. We still maintain the call. The third one is in soybean oil, which is triggered on the 15th of July, with the reference price positive chart set up at 70.15, and the current price now is 71.57. The last outstanding call that we have is micro WTI crude oil. Is still pending at a reference price at 87. The call is not triggered yet at the moment. As usual, the highlight of our briefing, the future market guide, we are anticipating a positive opportunity in FKLI. The initial investment is 4,000. Short-term chart setup is positive. Reference price is 1710. Potential profit price is 1734, 1757, 1775. Targeting a gain of 1,200, 2,350, 3,250. Potential stop loss price is below 1694, capping the potential loss at negative 800. The risk and reward ratio is 1 to 1.5, up to 4 times. The second call for the week is micro silver. The initial investment is USD 6,278. Short-term chart setup is positive. Reference price is 57.19. The current price is 59.125. Therefore, this call you might have to wait a while. Potential profit price is 61.565, targeting a gain of USD 4,375. Potential stop loss is below 656, capping the potential loss at 1,190. The risk and reward ratio is 1 to 3.5. Well, we are pleased to announce the launch of our new client exclusive initiative, the AMPM Market Guide, which has been active since June 2026, strategically designed to assist you in navigating crude palm oil futures intraday movement with precision. This service provides 2 daily market calls, 1 in the morning, 1 in the afternoon. Please note that all recommendation strategies are strictly intraday with no over-session position, as this premium features is reserved exclusively for RHB IB clients only. We invite you to contact our dealer or reminder for further information on how to access these insights. If you are completely new to futures market, we also got you covered with Trade with Passion 2.0 campaign, which give you up to 500 zero brokerage trading to help you start your journey. Ready to dive in? Get in touch with us or drop us an inquiry on RHB Invest website today. Well, the good news is every trade you place will also automatically qualify you for trade and win lucky draw entries, giving you chances to win a Tesla or take away a monthly prices of iPhone 17. Well, that's all from me. Thank you for your time. And now I'll hand over to Joseph. Joseph, over to you.
All right. Okay. All right. Morning, everyone. Thank you, Megan, on the futures update. So looking at the Hang Seng market, right, for the past 1 week, right, Hang Seng remains bullish so far, and the market sentiment lifted strongly by these four big cap companies: Alibaba, Tencent, Xiaomi, as well as SMIC, right? Such I think that the index should see some upside follow-through actions this week. Firstly, we pay attention to Xiaomi, which have managed to climb above 25 Hong Kong dollar. So this 25 Hong Kong dollar has become the immediate support. And in the event that Xiaomi cross above 28, it will move towards 30 and followed by 33, right? So if the fund managers, the smart money are looking at the Hong Kong market again, right? Definitely Xiaomi will be one of the counters that they'll be eyeing for, right? Apart from the Xiaomi, we still have Tencent, Alibaba, as well as the Meituan and SMIC as well. So just keep an eye on all these big cap company that may see some momentum this week. Apart from the Xiaomi, then on Lenovo have managed to complete their consolidations and climb above 23 Hong Kong dollars. So upside will be 25 and followed by 27. Downside is 21. Then on look at the China A shares yesterday, right? Although the index overall is moving on a lower low and lower high, right? Correction is still in play in the medium term, right? But the index managed to climb above this 14,900 point level, right? Look at yesterday performance. Most of the stock have rebounded strongly. Not only strongly, you can see that a lot of stocks have rebounded with double digits. So the idea is very simple. Whenever the shares have actually moved at lower, every rebound, we'll see a very high percentage gains in terms of rebound. So for China, right, the strategy will be looking at stocks that are actually heading for counter trend rebound, such as one counter I see this morning, 000988, right? These are Haokang Tech company that right now are touching the 200 days moving average, which is a long-term moving average line. So some technical traders, they will be looking at a 20, 50 or 200 days. So as such, I think the this Haokang 000988, the shares will definitely flash out for traders who they are filtering strategies using a 200 days moving average. So if you look at the Haokang right now, they are testing this 115 breakout. We'll see Haokang move to a 125 followed by 135. Then on the downside support is 105. So looking at the counter trend rebound strategies, the 000988 will be one of the counters that I'll be looking at this week, right? And apart from the this Chinese market, right? Looking at the local market, let's spend a bit more time in the local market. FKLI is heading for consolidations. We just keep our stop loss point unchanged at 1680. We keep a bullish bias view on the FKLI. Now, meanwhile, FCPO, right? We still see corrections in play, right? The FCPO will be going the sideways and corrections. So it'll be trading in a band, right, until it break above 4,007, right? So we just monitor closely what happened to the ringgit directions as well as the oil price directions that both can sort of affect the sentiment on the FCPO, right? And let's walk through a few local stocks. I think our market is actually quite active recently, right? Although the beginning of the week, you do see weakness in the US market. There was a bombing here and there, right? And some more the US soldier died, right? But look at market in Malaysia, it appeared to be very resilient, right? Thanks to the inflow of the foreign funds as well as a very strong flow of local institution fund. So with very good retail sentiment, I think last week we just had two sessions, one in Johor by RHB, and then I also give a talk at the Share Investor Forum last week on Sunday, and continue to have a view that tech stocks will be very important sectors that we'll be looking at. You look at the ECN's recent economics report, they have actually upgraded this GDP, right, overall on the first half, and they upgraded the second half assumption as well. So the full year GDP for Malaysia have went above 5%, which is a very strong GDP number for 2026, right? And that's actually helped by two very important components, which is one, domestic growth as well as the external market, the export sectors. So come to export sectors, firstly come into the mind will be the E&E and some of the equipment. And so I think the momentum will be continuing on the second half, and look at a few tech companies such as DNEX, companies are on the verge of turnaround. And if they break past this 44 cents and stay above 44 cents, they should move to 48.5 and followed by 52. Target support is 41.5. So recently in the market, there are two brokers have initiated coverage on DNEX, and I think I look at their momentum. The uh, interest is actually getting better and better as times goes by, right? Then on, apart from the DNEX, which is below 1 ringgit stocks, we do have another above 1 ringgit stock that move in a very strong momentum. The equipment maker Pentamaster, right? And so this week, the Pentamaster managed to break above 5 ringgit, and right now it's moving towards 5 ringgit 10s, 5 ringgit 50, and followed by 6 ringgit mark. And looking at the Pentamaster, they just completed their consolidations, and you look at the price volume profile, right? 4 ringgit and 55 cents will be a very strong stop loss point for Pentamaster, or major support here, right? As long as stay above 455, Pentamaster should see some upside movement. So in trading, you not only look at the 20 cents, 40 cents, you also need to look at stocks that above 1 ringgit. So Pentamaster will be one of the tech stocks that is above 1 ringgit, which I think, right, look at the Pentamaster, retail is not very active, but local institution fund are very actively looking at this counter. And for those of you who wish want to piggyback on the local institution fund, right, you can actually look at Pentamaster right now. And then on recently, there's a turnaround counters, which we do see the VS have jumped above 24 cents, and have a very strong support at 22 cents, and right now moving toward 26 and 28 cents. I think as of yesterday, right, if we are looking at the stocks that below 50 cents, right, VS have garnered a lot of market interest. And looking at their fundamental, right, just look at, I guess I check on the Bloomberg, so far for many years, right? Although the revenue have actually coming down, right, profit getting lesser, but overall, VS still generating a very strong, healthy cash flow over the years, right? And as such, I see that technically, right, VS have very strong momentum, right? Possibly move towards 26 and followed by the 28 cents. So if you are looking at stocks that below 50 cents, then on VS will be one of the stocks that you'll be looking at, right? And then on, apart from the external market, right, the export, we just look at some of their local player, right? I do see that MN Holdings have been winning the projects, and right now they managed to break above 2 ringgit and 90 cents. So as I mentioned, our GDP is being driven by the external, the export counters. Don't forget about the domestic counters as such, like the utilities player, right? YTL Power, Tenaga, solar counters. which you see the solar vest have actually went up yesterday, right? So just so look at the data center that we have actually very strong pipeline right now. So MN Holding is benefiting from this data center recently, and share price have a break 2 ringgit 90 cents right now, heading towards 3 ringgit 10 cents, and followed by 3 ringgit 25 cents. Right now, the next speaker will be David, but I just want to share one more counters, which is a public bank. You can see that public bank have been consolidating sideways at 4 ringgit 90 cents. I think for retail, right, apart from the tech stocks, one of the account sectors that retail have been looking at was actually a bank counters. And last week, quite a lot of people text me. They actually overlooked that public bank have a special dividend that have committed for the next 3 years. Timing wise, we're not sure when it's going to happen. But look at the price charts. Market have give a confidence vote, and the share price is hovering at a 520 right now. So we have been saying that in the month of August, right, especially month of July, one of the sectors that are likelihood to actually move is actually the financial sectors. Most of the banks are giving dividends uh, after the August results, and you can see that public bank have reached 520, next level with 550, and followed by 580. Right, downside support is somewhere at 4.60. Okay, and before I pass over, just want to highlight two more trading stocks this morning. Firstly, MPI that have break past 46, heading towards 49, and followed by 52. Downside support 43. Then on the Penang Tech counter, UWC have crossed above 6 ringgit 15 cents, going towards 6 ringgit 50, followed by 6 ringgit 85. Downside support is 5 ringgit 80 cents. So we have two MPI as well as UWC in our technical analyzer this morning. Right, I'll stop here and pass on to David on CIMB. Thank you.
Yep. Thanks, Joseph. Morning, everyone. So for today, we have a note on CIMB. This is the usual pre-close meeting that they have with analysts as well as the institutional investors prior to their upcoming August results. Now, for the upcoming August numbers, we expect pre-tax profit could be slightly lower year on year because of net interest income drag, some margin pressure, as well as FX impact, but higher quarter on quarter. This is on higher operating income. We are expecting CIMB to declare a total interim dividend per share of 26.3 cents. So it's about a 3.5% yield for the quarter. And this includes a 5.8 cent capital return special DPS. In terms of the updates from management, I think firstly on margins, this is where management said there could be some risk to the margin guidance that they have provided, which is plus to minus 5 basis points change from last year. And this is predominantly due to the situation in Indonesia, where funding costs is increasingly coming under pressure, while it is difficult to reprice up loan yields due to competition. Also, for 2Q, CIMB had bulked up in terms of its liquidity in Malaysia. And this is really in anticipation of their strong loan pipelines that they expect should lead to better loan disbursements in the second half of the year. But, in the near term and in second quarter, there would be some margin pressure over there. However, looking ahead to the second half, management sees margins being stable to perhaps even slightly improving versus the first half of this year. And that is coming from a combination of, that again, loan pipeline drawdowns and disbursements, as well as liability optimization initiatives at Singapore, as well as Thailand. Asset growth, really, they said, was actually pretty good, and that should also help cushion some of the margin pressure. On non-interest income, this has actually improved sequentially. And management said that, it looks like is coming from fee income. On the trading and FX, this is expected to be lower versus first Q because first Q was really an exceptional quarter, and it's going to be difficult to beat such a high bar. And asset quality generally was stable across geographies. There have been some decent recoveries and write-backs that they saw during the quarter, but we also do expect them to use some of these write-backs, and also with some of the previous overlays for the tariffs maturing, we expect them to reallocate that for emerging risks relating to, for example, the inflationary situation. However, because you have this maturing overlays previously made, as well as these write-backs, we think their 25 to 35 credit cost guidance should be broadly intact. And just lastly on the capital return plan. So, there's still 1.2 billion left out of the 2 billion that was initially announced in November last year. CIMB did not say how are they going to distribute that between 2026 and 2027. We have assumed it is evenly split. And as mentioned again, that forms part of our 3.5% dividend yield expected. There's another 11 billion Thai baht coming back from the Thai restructuring that's going on over there. Management had previously said this is going to be used to be returned to shareholders as well as retained for growth. But our sense from the meeting is that increasingly quite a sizable portion could actually be retained for growth. Management said Singapore business plus domestic SME and commercial are areas that they are looking to grow. So all in for now, we think that Indonesia is still a drag, and hence we are keeping our neutral call and our 8 ringgit 35 cent on the stock. Okay, so that's it from me, and I also think that's all from us today. Thank you for joining us. Happy trading, and we will see you again tomorrow at 8 a.m. in the RHP Morning Kappa at 8. Thanks a lot.